Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to a brand new edition of the State of Economy podcast. I'm your host, Hamsini Karthik. We're dealing with a new topic in the financial services space. In fact, it's just come up. It's called the public tech platform. What exactly public tech platform means? Is it a credit enhancing opportunity for the country and for the lenders? To decode all this, we have with us Madhusudan Ekambaram, the co-founder of Kreditbee. Kreditbee is among the largest fintechs in the country, and it has partnered with a lot of banks and fintechs and has proved to be a very successful one in the partnership model. Madhusudan is here to break down exactly how partnerships and a collaboration in a mega platform like the public tech platform can help multiply credit, especially to the most deserved ones. Hello, Madhu. Thank you so much for joining in. Someone possibly as the most successful fintech in the whole space, which is partnered with so many people within the lending ecosystem. We would like to hear you talk about your take on the entire public tech platform. So welcome once again to the show, Madhusudan.
Thank you, Hamsini, for hosting me here. I look forward for this discussion.
In your mind, what was the reason or what was the trigger for this whole public tech platform that RBI rolled out about? What is the particular problem or what is that particular gray area in the whole lending space that you believe this tech platform can solve?
So, Hamsini, before I start, probably I'll give some introduction about what was our journey and kind of try to relate your question to that journey itself. Right. So back in 2018, we launched Kreditbee. Kreditbee is a digital lending app which was launched on the Android platform, which was mainly focused on serving the middle India. So what I mean by middle India is these are the cities which are let's say not the metro cities, not the rural ecosystem, but the ones which are like in the top 100 cities, but barring the top 10 cities, right? So the between the 11th and the 900 cities, which are district headquarters in many states, which are the towns, which are the talukas, the main concentration at which we wanted to solve it. Now, right. When we looked at that particular market, I think there are two or three things that came out very, very stragglingly as something that the financial inclusion was very much necessary there. When we looked at that, the credit bureau penetration, which is an indicative of how much of the population is currently banked in the formal sector, right? So back 2018, I think that was the entire bureau penetration was only about 20% of the entire Indian population. Right. So there was this large 80% of the population which was not covered by the bureaus at that point of time, which basically meant that, these guys were trying to bank with an unorganized sector. Right. So that's the opportunity. What we thought we would solve it by using the technology platform. Right. So now I'll give you one more data point which can help us realize how tech has enabled for the formal banking for these sectors. So every day today, we get about close to 60,000 new loan applications on our app, right? So now on this 60,000 new loan applications, let's say our approval rate is anywhere between 12 to 14%. So we end up giving about like 6,000 to 7,000 new loans on a daily basis. Now, the reason why I quoted this particular metric here is that just imagine 60,000 people trying to line up even to submit their loan applications in front of the physical branches of the banks, right? So let alone underwriting them, even the document collection through a phygital or a physical way itself becomes a nightmare for any physical infrastructure to kind of hold this kind of a scale. So this can largely be solved with the technology as a platform where the entire end-to-end process is digitally led. So starting from origination, starting from the KYC process, VKYC process, which requires certain phygital element, but still one could operate sitting in an office, then underwriting, then the collections, everything to be led digitally can the only way to solve for this particular problem. And in that way, the tech platform as such made us today, for example, so we have served close to about like 10 million customers, almost 9
Wow.
to 10 million customers have ever borrowed from our platform. Among that, more than 1 million customers came to our platform without any sort of a credit score or any credit bureau footprint, right? So what we call them as the thin files or the new to credit. More than 1 million customers have graduated from being a new to credit without having any kind of a formal credit history prior to coming to our platform. Today have developed a very credible bureau score. Now look at the people's mindset here, right? So the people mindset largely is to go for a home loan ultimately. What is the middle class? When I talk about mid India, so we are talking about the middle class, right? So what is the
Right.
middle class ultimate aim in life? Is to
Buying
go
a
for
house.
this house loan, right? So
Yes.
finally going and buying a house loan. Now,
Yes.
house loan for somebody without having proven a good credit track record is very, very tough to get from a banking sector. This is where we come in, and then we have helped these people to build that kind of a credit score, which ultimately
Right.
they are made eligible to kind of go for this home loan, right? So I
Right.
think I talked about a couple of metrics, and then that's how I try to kind of indicate on how the tech has really made the changes, at least
Sure.
from my own experience, how tech has enabled a large part of this mid India or the middle class India to get into the formal lending or the formal banking sector. Yeah.
You spoke about having formalized a huge population. The fear that a lot of lenders used to have, at least till a certain point in time, is that this 50% of the new to credit population is unbankable because you don't know their credit history, their credit behavior may not be reliable, along with the public tech platform throwing up a lot of data, including land records, etc. And your own experience of having dealt with people in the below tier 2 categories, how do you think that customer engagement and underwriting both can be uplifted by using this sort of technology enabled parameters?
No, sure. So see, again, let me talk something on what is the practicality of today's formal sector, right? So one is, while a lot of our middle class, mid-India segment of people are very much intact with the credit discipline, as in like
Okay.
they would be borrowing from, let's say, the local pawnbroker, or they would be borrowing from a cooperative society. Of course,
Right.
cooperative societies
Right.
are regulated. They would be borrowing from friends and family. Now, most of these guys actually pay in time. A good percentage of the people pay this kind of credit in time, but the discipline or that particular credit behavior is not formally recorded anywhere. Now, this is the
Okay.
issue. What the challenge what most of the middle class mid India people basically face. Now, when they are not recorded, that is not acknowledged, right, by
Right.
by the formal sector. Now, that is one
Right.
of the problems. Now, therefore, what I basically try to indicate is that it is not totally true that the mid India, middle class India are mostly the defaulters, or they are not paying back the money, or there is not enough records. It's just that the formal recording of their behaviors are not done sufficiently in today's ecosystem.
Right.
The
Right.
second
Right.
part, second part is the ticket size eligibility, right? So what I mean by that is, for any physical infrastructure-led banking operations, a certain minimum ticket size of loan makes a lot of sense. For example, for you and me would be operating in one of the top banks where we would be banking. Now, if we call them up, or if you try to call them up and ask for a 25,000 rupee personal loan or a 30,000 rupees personal loan, the straight answer would be, probably they would want to give you a 3 lakh to 5 lakh, or they want to give you a credit card in that particular scenario.
Correct.
Now, what are the problems here? Majority of the mid-India, middle-class India are not eligible for more than a lakh, more than 50,000 rupees kind of a credit facility. Their annual income should be at about like 5 to 6 lakh rupees. And the
Yes.
regular expenses, it could be 5 to 6 lakh rupees largely translates to about after tax, about 40,000 rupees, 35 to 40,000 rupees in hand. And they paying for about like 15,000, 10 to 15,000 rupees for their rentals. They have to take care of a couple of kids. If they are going to school, then the school fee has to be paid. And they would be having at least a two-wheeler kind of a vehicle loan where they're already servicing some of this
Correct.
EMIs from that salary. So the eligibility itself for that particular population is not really beyond 50,000 rupees or 1 lakh for their emergency personal needs. Right. So now we cannot entirely blame a physical infrastructure-led NBFC or a bank here, because with that infrastructure in place, they would want a certain ticket size to be managed. Now that's where
otherwise it doesn't make economical sense for them.
It does not make economical sense for them to kind of operate. Now, in that ways, this entire problem can be only solved using the digital infrastructure, right? So the tech infrastructure, what comes into the play, can solve for this. Largely, what I call it as a low ticket personal loan segment, which is ultimate need of this middle class India, that can be solved using digital, because you don't have a physical infrastructure there, right? So that's the cost benefit what one could gain by having the digital way of solving this particular inclusion problem.
So you're saying it's not a quality issue there; it is even the reach issue. One step before even we can go
the
to
minimum
quality.
eligibility issue, right? So there are multiple these issues. Further to that, we deal with a lot of tier 2 cities or tier 3 towns. In those towns, you don't find many private bank branches over there, right? So you would largely find either SBIs of the world having their branches, 1 or 2 branches at best in the city, but not the super aggressive private banks, which probably what we find in the metro cities or in the tier 1 cities. They are non-existent with such aggression in those cities, right? So the availability of the infrastructure or even that particular branches itself also makes it difficult for the formal large banks to kind of solve for this problem. And that's where the digital infrastructure or the digital app-based lending has really made a difference in terms of inclusion, the financial inclusion of this category of population.
Perfect. When I was looking at the entire circular and trying to figure out what this whole public tech platform could possibly mean, clearly it's not a lending platform. It's only an enabler platform where data from across a lot of segments will get pooled in, and which would enable somebody, a lender who is onboarded on that platform, to look into a customer's backend data and accordingly take a credit decision. Is my understanding of the whole platform right?
Definitely, that's what it is today. So there is certain proper.
So this is almost like if I were to put it in very understandable manner, an aggregator for an account aggregator, because this is what account aggregator was intended at. That the basic KYC related data is made available in a single platform. From there, banks or NBFCs can pick up whatever they need and thereby reduce their turnaround time, right? Here it goes 3 steps beyond what a AA is supposed to do, and it has every back-end information about that particular person, right? So when AA itself has taken more than a year to sort of come into mainstream and find acceptance among a lot of lenders, both banks and NBFCs, because there were a lot of credibility and trust-related issues that had to be sort of addressed there. Where do you think the challenge for the public tech platform could be?
Let me just take a couple of steps back and start answering this question. See, I think the digitization itself had a major positive impact in the inclusion and the lending sector. For example, if we start looking about like 6-7 years back, it was the India stack. Right. So the entire Aadhaar ecosystem which was brought in, where it was eKYC was made possible, where the CKYC systems came in, where the digital locker came in, right? So most of them became some of the building blocks in digitizing this entire banking process, right? So they were hugely successful. Post that, I think one of the application-based infrastructure was the UPI, right? So UPI is a grand success. I mean, it is one of the successful factor which keeps us or which separates us from the entire global system, right? So today in US, there is nothing which can be related or equivalent of UPI that is already there functioning there, right? So and UPI has been taken by many other countries also, right? That entire infrastructure. Now, those entire digital ecosystems, what the regulator and the government is trying to make it active, has largely benefited both the public and even the enterprise or the banking side or the banking industry as well, right? So that's one part of the story. Now, second is very much coming to account aggregators, right? So account aggregator was one of the thoughts which was formalized about 2 to 3 years back. I think 3 to 4 years back, when the licenses were started issuing. Earlier it was in license, then it was converted to a formal license, what got into play. Now, account aggregators took certain time in terms of making a practical impact, so
Right.
the first thing was, when really the account aggregators started, the banks did not have the infrastructure in their backends to offer the account aggregator related solutions. I mean, like the bank account access was
Right.
available, but today I think that has greatly improved. So today the success rates have gone very high. I mean, we are probably one of the largest users of the AA ecosystem, and we do fetch a lot of AA information in underwriting our customers. Now the success rates in the last 3 years has dramatically increased in terms of the information what we could avail for our customers, right? So back in 2021, when we started using it, I think the success rate was less than 10% for us. I mean, if we hit for 100 customers, we would hardly get about information about like 10 or less than 10 customers. Now that percentage has gone beyond majority, right? So now it is about like 60% for us. The success rates are 60%, right? So now maybe in 5 years down the line or 10 years down the line, this success rates might go up to 70, 80 or 90% as well. That's the time vintage also one has to kind of look into considerations whenever such digital platforms are shaping up the industry, right? So we should not jump very much early into the conclusions. Whether anybody who evaluated in 2021 about AAs had the feeling that whether is this only a theoretical concept and whether be any kind of a practical use of it. But today you might see that I think that is improving greatly. Now coming to the public tech platform, what we are envisioning, right? I think that is a step. It's a step next on top of this AA, right? So AA has a certain BFSI information what is kind of aggregated, but there is a need to kind of get, let's say, if we are underwriting a small SME or a micro SME, we need his GST led data. When we have to kind of do a secured loan, then we need data around the property, whether it is a grade A property or whether he is using a imperfect property. What do we call it as a perfect property, imperfect property, right? So what kind of property and everything, sometimes the entire diligence takes a month together, especially when you do the secured loan, when we have to aggregate all this information, because the systems are a little bit disintegrated today. So in Bangalore, the system is like, there is a BDA, BBMP, where there is a Khata, B Khata systems and whatnot. The moment you go to a tier 2 town, this concept does not even exist over there. They would be talking about Pani or Podi or any of those sorts. So there is a it is not a uniform system today in terms of underwriting some of these things, and therefore it's a good step by getting out this public infrastructure time. Maybe, and as you are also kind of questioning, it may not lead to results. Practical success may not be within a year's time or so, but who knows what happens in a decade, right? So we have a lot of success in many of these tech platforms, what has been led by the government and the regulators.
I'll go back to the question where we started. As a fintech who started off collaborating with non-banks and banks on small ticket loans, I would say Kreditbee was initially a push product. You had to reach out. Today, you've come to a stage where people are reaching out to you for your distribution strength. How do you see people like you adding value to the platform? Because I think pretty much banks, non-banks, fintechs, digital lenders, everybody are going to be there on the platform. So where do you see the incremental value coming for Kreditbee through the public tech platform?
So let me talk a little bit about the collaborations that we did with the banking and the non-banking NBFCs. When we started Kreditbee, we already had a NBFC license. So we were an NBFC company even when we started. To give you an idea, so back in 2018, when I launched Kreditbee, the first month of our launch, we disbursed about 2.5 crores worth of loans, right? So, but by the fifth month, we were disbursing close to about 100 crores of loan. Right. So that was the kind of pace, right? Somebody might look at this and say that, you guys were so aggressive, damn aggressive and whatnot. But I'll tell you what was the background there, right? So we were not marketing because we didn't have enough capital at that time. We didn't have any capital to cater to such demand itself, right? So we were not marketing. More than 90% of the loan applications or the people who are coming onto our platform was organic. It was purely through the word of mouth. we were not spending even a single dollar to acquire those customers. That was one thing. Second is, when such pace of growth was happening, we had very, very limited capital. Now this is the condition for a non-collaborative mode. If I had thought about it at that particular point of time, I could have done only about like 30-40 crores of that entire volume that was happening in that fifth month. Right. Now, how could I cater to such demand and serve those customers was purely because of the collaborations what we did with some of these larger NBFCs, right? So
sure.
It was IIFL which came in as one of the first corporate NBFC to partner with us. I think that during that phase that was made possible. Later, when we progressed, just to give you an idea, today we disperse more than 1,700 crores every month. Right, so 1,700 crores is a pretty large number for a single growing entity to kind of cater to. Today, we have about like more than 10 NBFC partners who co-lend along with our NBFC. Right, so it is Poonawalla FinCorp, it is Cholamandalam, it is Piramal, Tata Capital, which is coming.
Aditya Birla.
Aditya Birlas of the world and whatnot, right? So the Aditya Birla we are integrating and we are starting almost in a couple of months.
Cool.
That is the phase with Aditya Birla. Now, when they came in, then only this demand could be kind of catered to, right? So I think in that way, collaboration was one of the key factors which led us to where we are today. Without that, totally trying to be self-sufficient on our own NBFC capital, I think we would have been operating at half the scale, probably, or even less than that, if we were to do it totally by ourselves. So now that's the difference what collaborations have made to this industry.
So do I infer then that, with a lot of information getting available at the back end, with the turnaround time significantly expected to drop down, you would see that we're talking about becoming a 5 trillion economy, and my guess is that this drive to 5 trillion will be a consumption-led growth. So all these puzzles of the pieces of the puzzles put together, do you see it as a great compounder to loan growth in the ecosystem?
Oh, definitely, yes. Right. So it's the compounding, what I call it as let's say the tech platform compounding. Right. So starting with the India stack, the Aadhaar's ecosystem, the UPI systems, the AA systems which has come in, is all compounding towards the greater efficiency. Right. So this is the compounding effect which is kind of led to these efficiencies, wherein the need of today's customers is also growing. It's a very growing economy. It has to be led by consumptions. It is a middle class dream-led economy. Right. So what I mean by this is today the India middle class is growing tremendously. Right. So earlier education was a problem. Earlier jobs were a problem. How many people in a single family were working was a major concern. How many women were working was a major concern. Today that entire metrics are all changing in the middle class. Right. So education is one of the greatest thing, which is enabling many people from a family to kind of work and contribute to that particular household economy. Right. So when such changes are happening, the needs are also there. Now, what are the needs here? Let me put it in a couple of ways. Right. So there is a school fee loan which is required for this father. Right. So for that, takes us about a decade back if he's still going and borrowing from a pawnbroker or from a informal sector. Right. So now he has to kind of have these efficiencies in hand so that he can enable his kids to kind of get this education. Now there is a brother or a sister of this particular head of the family who gets into a job or who gets into a college. Now he has to solve for their commutation. Right. So now the way they solve for the commutation is by buying a second-hand two-wheeler. Now there is no formal lending ecosystem that has developed for the used two-wheelers. Now in that case, he has to go for this, the personal loans to kind of solve for it. I'm just giving you a couple of examples, so which kind of also enables people for a greater good, which adds to the economy, right? So those kind of needs is something what needs to be solved in a much more efficient way. And that's the trend at which we are all growing is what I see. And that's a good news for both the customers and the lending ecosystem.
What are the main learnings at Kreditbee and for you personally through the collaboration route? Because as much as, co-lending or partnering with lenders is concerned, sounds like a simple thing. It's very difficult. The moment you go near, different structures start coming into the agreement. So what are your takeaways? And for somebody who's looking at, a mega level collaboration with a platform like this, what would your bit of advice be to them?
Yeah, sure. So there is no simple turnaround for all these collaborations or the trust that one has to win in the ecosystem. I think in my earlier days, probably I have knocked many doors to collaborate. We were a no-name, simple fintech company which was trying to look for partnerships within the banks and the NBFCs or the corporate large NBFCs. And yeah, the rejections are part of that. It's more about continuously trying for it, right? So I don't know, especially with the banks and NBFCs, I would have met more than 50, more than 60 these institutes before cracking a real partnership, which was kind of doing a co-lending, right? So I think those rejections are part of life, right? So,
but a fabulous number that you're quoting here. Yeah. Okay.
So, that was the only role for me. I had to kind of go and collaborate. So I used to book about like 5 to 6 meetings a day and start meeting many of these people, right? So, I mean, apart from that, I don't know what was the role of a CEO back then, because I had a very credible co-founders who could take off the internal operations or the technology operations.
Sure.
So I used to go and literally hang out and meet, and rejections were happening on the table every now and then. I mean, somebody would at least listen to me for half an hour and then reject. And I faced rejections even in a 5 minutes, right? So in a 5 minutes on top of the table, he would say that, yeah, I'm getting a call and we can meet later. Why don't you walk off from here, right? So those rejections are going to happen, because it is not that they are mistreating you, because being a large corporate NBFC or a bank's head or a senior manager has his own obligations where he has to look at where the bank is partnering with. So when you have no lot of track record, you don't have a vintage, then it also puts the other party into a very, very tough position to kind of extend their hand and then collaborate, lend their name, partnership, start this process, because they are not aware of how good and how prudential and how diligent are you, and whether they have such time to kind of even sit and evaluate. Maybe no at that particular point of time, right? So, but on the other hand, I think it's a continuous try from the fintech that has to happen at a very, very early stage, and we have gone through all that, right? So then a couple of partnerships happened. Now what happens is, during the partnerships, one should not act too smart. I mean, it can be beneficial in a short term. One would feel that they acted smart and that benefited on a short term, but the other guys are not stupid people, right? So they are also equally intellectual people, and once they figure that out, there is a trust factor that gets diluted within the partnerships, right? So the further partnerships, larger partnerships, only happen depending on how the base of the initial partnerships have been created and what the kind of the positive feel that the partners extend to other parties who are coming into this a grand partnership, right? So I think in that ways, one has to think about that and act accordingly, which will lead to that. So again, the partnerships is also a compounding effect, right? So and again, just to let you know, today the largest partners does a co-lending of close to about 400 crores on a monthly basis with us. While I told that I have about like more than 10 partners, the largest take such exposure with us, and there is an increasing demand from these partners that they want to get more origination from our platform. And we are in a backseat saying that we don't want to increase the concentration risk on any single partner here, and that's where we restrict the volumes to these partners, right? So things turn around, and it was not too much of a time, right? So 2018 and we are in 2023. It's a 5 years timeline where all these things have compounded. So be true to yourself. Don't oversmart the partners just for a short-term gain. Would be constantly try. Would be my way of doing it. These are boring answers, but that's the way for success. There is no,
like they say, banking is boring. So
yeah. So there is no single thing that what you can do and then things can turn around table. I don't think life and business is such easy.
With that, it's a wrap on this edition of the State of Economy podcast. We'll come back to you very soon with another very interesting topic that's rocking the world of finance. Till then, do take care.